Every day, millions of traders stare at the same charts, using the same indicators, trying to beat the same market. But here's the brutal truth: over 90% of them lose money. Why? It's not because they're uneducated, it's not because they don't have strategies. It's because they're fighting the wrong battle. The real enemy? Your emotions, your impulses, your ego. This isn't just a trading tutorial. This is a psychological masterclass based on Trading for a Living by Dr. Alexander Elder, a trader and a psychiatrist who spent decades studying what separates the pros from the blown up. We'll take you deep inside the mind of a trader. 1. Why fear and greed destroy your trades before you even click buy. 2. Why revenge trading, FOMO, and overconfidence are symptoms of mental traps. 3. And how the pros use discipline, journaling, and emotional control to win again and again. If you've ever felt like the market is out to get you, it's time to realize it's not the market, it's you. But that ends today. Let's dive into the most overlooked but most powerful weapon in trading success: psychology. You can master every technical indicator, backtest every strategy, watch hours of YouTube tutorials, and still lose money. Why? Because trading isn't a math test, it's a psychological war. Trading for a Living by Dr. Alexander Elder isn't just a book about the market, it's a deep exploration of the battlefield inside your mind. In this video, we begin our journey into the mental edge, the part of trading that separates the consistent winners from the emotional wrecks. Part 1. Why psychology is the foundation of successful trading. The market doesn't know you. It doesn't care about you. It isn't out to help you or hurt you. It's completely neutral. Every price movement reflects the decisions of thousands of people. It's a mirror of crowd psychology. The only thing that can destroy you is you. As Elder puts it, the market is a battlefield. Most who enter are untrained and unprepared. You may be skilled with charts, but the moment you feel fear, greed, or ego, you lose your edge. That's why the most important skill in trading isn't analysis, it's emotional self-control. Segment 1. The 3 inner enemies. Elder identifies 3 core enemies within every trader. 1. Fear. Fear causes hesitation. It makes you miss winning trades. Or worse, it pushes you out early when things get volatile. 2. Greed. Greed blinds you. It makes you ignore risk. You hold too long, trade too big, or chase a trade you should have skipped. 3. Ego. Ego demands to be right. It tells you, I can't lose. It stops you from taking losses and learning from them. These enemies are invisible, but they show up in your decisions. If you want to win, you must learn to recognize and disarm them. Segment 2. Emotional discipline is the real edge. Elder doesn't believe in magic systems. He believes in emotional systems. That means learning how to stay calm when others panic. 1. To sit still when there's no signal. 2. To walk away after a loss. 3. To follow your rules, even when your emotions scream otherwise. Trading should be boring. Excitement is for gamblers. Professionals treat trading like surgery: methodical, controlled, neutral. Segment 3. Become the observer. The first step to mastering your trading psychology is observation. Elder teaches you to become both the actor and the observer. You place trades, and then step back and watch yourself. Are you trading for the right reason? Are you getting tense, impulsive, hesitant? This habit of observation helps you catch mistakes in real time and correct them before they become expensive. The best way to do this? Keep a trading diary. Segment 4. Key takeaways. Let's recap. 1. The market doesn't care. It's your mind that matters. 2. Fear, greed, and ego are your biggest threats. 3. Emotional discipline is more powerful than any strategy. 4th, observation creates self-awareness, and self-awareness leads to mastery. If you can't control yourself, the market will do it for you, brutally. But once you learn to master your emotions, you'll unlock the real edge that drives long-term profitability. Part 2, trader, personality types, and building discipline. In Part 1, we uncovered the truth that the market doesn't beat you. Your emotions do. Now, in Part 2, we take the next step. Who are you as a trader? And how do you build real, repeatable discipline? Dr. Alexander Elder was both a psychiatrist and a professional trader. He discovered something most traders never learn. Your trading style must match your personality, or it will destroy you. Let's explore how understanding yourself can save your trading account, and how discipline can be built step by step. Segment 1. Know your trading personality. Not all traders are the same. Elder observed that most traders fall into one of several personality types, each with its strengths, each with dangerous blind spots. 1. The impulsive trader. Moves fast, hates analysis, loves action. Strength. Quick to act on opportunities. Weakness. Often trades without a plan. Solution. Impose structure. Use alarms, timers, and tight rules. Learn to pause. 2. The analytical trader. Obsessed with data. Loves indicators. Hesitates often. Strength. Detail-oriented and cautious. Weakness. Overthinks. Misses good setups. Solution. Limit indicators. Set time limits to make a decision. Trust the process. 3. The intuitive trader. Goes with gut feeling. Good at reading the market mood. Strength. Fast pattern recognition. Weakness. Inconsistent. Hard to teach. Solution. Journal to validate intuition. Backtest. Create structure around instincts. 4. The fearful trader. Overly cautious. Hesitates. Doubts every signal. Strength. Risk-aware. Weakness. Paralyzed by indecision. Solution. Pre-plan trades and follow through. Build confidence with small wins. Understanding your trading personality is the first step to building a system that works for you, not against you. The wrong system in the hands of the wrong personality leads to stress, sabotage, and account blowups. But when your method aligns with your mindset, that's when consistency begins. Segment 2. Discipline is not a trait. It's a system. Elder crushes the myth that discipline is something you just have. It's not genetic. It's not natural. It's trained. Discipline is a product of systems and habits. Here's how Elder suggests you build it. Step 1. Use a checklist before every trade. 1. Am I calm right now? 2. Does the setup match my system? 3. Where is my stop loss? 4. What is my target? 5. Am I trading for the right reasons or reacting emotionally? Step 2. Set limits. 1 limit number of trades per day. 2 limit size per trade. 3 walk away after X losses. The fewer decisions you leave to emotion, the more disciplined you become. Step 3. Train boredom. Boredom isn't bad. It's a sign you're no longer seeking thrills. Elder says the best traders often say the same thing. It's boring. And that's why it works. You're not in the market for excitement. You're here for results. Step 4. Journal after every session. Write down every trade. Log your emotional state. Track your behavior. Over time, your journal becomes a mirror and your greatest tool for growth. Segment 3. Recognize and break your emotional patterns. Without discipline, you will fall into emotional cycles. 1. You lose. 2. You try to make it back. 3. You overtrade. 4. You blow up. This is the revenge loop, and it's incredibly common. Elder teaches that discipline interrupts the loop. How? 1. You take a break after every loss. 2. You limit exposure after a win. 3. You follow a predefined system no matter how you feel. That's what makes discipline powerful. It removes emotion from your trading decisions. There is no perfect system, but there is a perfect system for you. When you align your personality with your trading method and support it with disciplined habits, you build a process that grows stronger over time. This is how professionals trade slowly, consistently, with discipline. Part 3, emotional traps and how to outsmart them. Most traders don't blow up because of a lack of knowledge. They blow up because of emotional traps. They know where to enter, but they enter late. They know they should cut losses, but they hold and hope. They win a few trades, and then lose it all in a single overconfident move. In this episode, we'll unpack the most dangerous mental traps that destroy traders and how to outsmart them before they wreck your account. This is part 3 of our Trading for a Living Psychology series. Let's begin. Segment 1, FOMO, fear of missing out. FOMO is one of the most common emotional pitfalls in trading. You see a stock flying. Social media is buzzing. The chart is exploding. You feel your chest tighten. If I don't get in now, I'll miss the move. So you jump in, but by the time you enter, the move is over. You're caught in a reversal. You take a loss, and you promise never again until it happens again. Elder's solution. 1. Trade setups, not emotions. 2. Accept missed trades. The market will always give you another shot. 3. Use your trading plan as your emotional shield. FOMO doesn't mean you're weak, it means you're human. But it's your job to let your system make the decisions, not your fear. Segment 2, the pain of losing, loss. Aversion. Losses are inevitable, but the way we respond to them often makes them worse. Most people would rather hold a losing trade and hope it comes back, rather than admit they were wrong. This is loss aversion, and it's one of the strongest psychological forces in trading. Elder's advice is clear. The best traders are not those who avoid losses, but those who take them quickly and cleanly. How to outsmart it. 1. Always use a stop loss. 2. Never move a stop further away once placed. 3. Remind yourself, taking a loss is a sign of strength, not failure. Segment 3. Overconfidence after winning streaks. After a few solid wins, the mind flips. You start thinking, I've figured it out. I can't lose now. This is overconfidence, the silent killer. Elder warns that success can be more dangerous than failure. Why? Because it makes you forget the rules that got you there. Common signs. 1. Ignoring risk limits. 2. Trading bigger than normal. 3. Taking impulsive trades with weak setups. Preventative tools. 1. Reduce your position size after a big win to stay grounded. 2. Revisit your journal and remind yourself of past lessons. 3. Stick to your checklist, especially when you feel unstoppable. Confidence is good. Overconfidence is lethal. Segment 4, revenge trading, emotional reactions to losses. You just lost a trade. It stings. Instead of stepping back, you say, I'll make it back right now. So you enter another trade without a setup. Bigger size, worse conditions. You're angry, not rational. That's revenge trading, and it's one of the most destructive habits in trading. Elder teaches that revenge trading is emotional hijacking. You're no longer trading. You're gambling for revenge. How to break the cycle. 1. Take a mandatory break after any large loss. Step away from the screen for 15 to 30 minutes. 3. Write in your journal. What triggered me? What was I feeling? Losses don't ruin traders. Revenge trades do. Segment 5, the trap of hope. Hope is a beautiful thing in life. But in trading, it's dangerous. Hope keeps you in losing trades. It whispers, just hold on, it'll come back. But Elder reminds us, the market doesn't know or care that you're in a trade. It doesn't owe you a recovery. If your signal breaks, get out. Hope is not a strategy. Rules are. Every moment you hold on to a bad trade out of hope, you're not trading, you're avoiding reality. Conclusion. Outsmart emotion with preparation. Let's recap the 5 emotional traps. 1. FOMO, fixed by rules. 2. Loss aversion, fixed by discipline. 3. Overconfidence, fixed by humility. 4. Revenge trading, fixed by space and reflection. 5. Hope, fixed by clear exit signals. Every successful trader learns to feel the emotion but not act on it. Your edge doesn't come from prediction. It comes from emotional control. Part 4. The Trader's Journal, your mental mirror. What's the most powerful tool in trading psychology? It's not an indicator, not a strategy. It's your journal. In Part 4 of our Trading for a Living Psychology series, we dive into Dr. Elder's most transformational practice. A trading journal is your mirror. It shows you the trader you really are. Let's discover how writing down your trades and your emotions can sharpen your edge, correct your weaknesses, and unlock long-term growth. Segment 1. Why a journal is non-negotiable. Most traders believe they'll remember what happened in a trade. But memory lies. It forgets details, it filters failure, it rewrites the story. Your journal tells the truth. Elder insists, a good journal reveals what you do, why you do it, and how you feel while doing it. It helps you. 1. Track what works. 2. Spot emotional patterns. 3. Study your own behavior. 5. Measure progress over time. Without a journal, you're not learning, you're guessing. Segment 2. What to record in your journal. Your journal should capture every trade, from idea to exit. Here's what Elder recommends you include. 1. Before the trade. Date and time. Ticker/symbol. Strategy or setup. Entry price, stop loss, target. Emotional state. Calm, nervous, greedy. 2. During the trade. Any changes you made, e.g., moved stop loss. Real-time thoughts or reactions. Did the trade follow your plan? 3. After the trade. Result, win or loss. Did you stick to your rules? What did you feel during and after? Key lessons or reflections. This isn't just about logging numbers, it's about logging behavior. That's where growth happens. Segment 3. Using the journal as a mirror. As your journal grows, so does your awareness. You'll start to see things like, I always trade too big after a win. I cut trades early when I'm nervous. I take low-quality trades when I'm bored. These realizations don't come from charts. They come from you. The journal becomes your mental mirror, and it doesn't lie. Segment 4. Weekly and monthly review rituals. Elder recommends stepping back for regular performance reviews. 1. Weekly. How did I follow my plan? What trades would I take again? What emotions dominated my week? 2. Monthly. Am I growing more disciplined? Are my results more consistent? Where do I still struggle emotionally? This is where real mastery happens. Not in the heat of trading, but in quiet reflection. Segment 5. Tools to make it easy. You don't need fancy software, just consistency. Tools you can use? Google Sheets or Excel, pen and notebook, screenshot tools to save your charts, journaling apps like Notion, Evernote, or TraderView. What matters is the habit, not the platform. Conclusion. Journal like a professional. A journal isn't just a habit, it's a professional edge. It keeps you accountable. It teaches you about yourself. It helps you correct the real mistakes, the ones inside your mind. Elder's message is simple. You cannot improve what you do not track. So, start today. Open a document, draw a chart, Record your thoughts and watch how much more self-aware and consistent like you become. Part 5. The Discipline Loop. From Psychology to Profits. You've studied your emotions. You've discovered your trading personality. You've learned how to journal, reflect, and reset. Now, it's time to put it all together. In Part 5, the final part of our Trading for a Living Psychology series, we explore what Dr. Alexander Elder calls the discipline loop. This is the cycle that transforms traders from reactive and inconsistent into methodical, professional decision makers. Let's dive in. Segment 1. What is the discipline loop? Elder's foundation rests on 3 M's. Mind, control your emotions. Method, follow a rules-based strategy. Money, manage your risk like a professional. But they don't work in isolation. They form a loop, a system that reinforces itself with every trade. 1. Mind, emotional awareness and discipline. Second method, clear trading rules that align with your psychology. 3. Money, risk management, position sizing, stop losses. Fourth journal, log in every trade, thought, and outcome. 5. Reflection, reviewing your patterns and behavior. Sixth adjustment, making small improvements. Then, you do it again. This is the process behind every successful trader. Segment 2, turning discipline into habit motivation is great, but it fades. Discipline is better, but it's fragile without structure. What you need is habit. Elder's psychology is clear. If you want consistency in your results, you need consistency in your process. Here's how you build it. 1. Morning routine. Check markets. Journal emotional state. Review plan and levels. 2. Trade execution routine. Follow checklist. Confirm entry, stop loss, risk. Observe emotions but don't act on them. 3rd, end of day routine. Log trades and thoughts. Rate discipline, not just profit. Highlight emotional triggers. Discipline becomes natural when it becomes automated. Segment 3, emotional detachment equals power. The pros don't feel highs when they win, and they don't spiral when they lose. That's because they're emotionally detached from outcomes. Elder teaches that your goal isn't to avoid emotions, it's to observe without reacting. Here's what emotional detachment looks like. 1. You exit a trade without hesitation, win or lose. 2. You accept a stop out and move on. 3. You don't celebrate every win or mourn every loss. You trade with focus, not feeling, and that gives you power. Segment 4, consistency. Beats intelligence. The markets don't reward brilliance, they reward consistency. Elder saw it over and over again. The smartest traders often failed because they couldn't control themselves. Meanwhile, average people with average strategies but great discipline slowly built wealth. Discipline, 1, prevents overtrading. 2, reduces emotional mistakes. 3, keeps you in the game long enough for your edge to work. Consistency wins every single time. Segment 5, tools to support the loop. Discipline is easier when your environment supports it. Elder recommends a few practical tools. 1. Sticky notes on your monitor with rules and reminders. 2. Phone alarms for break times or journal check-ins. 3rd, daily discipline scores in your journal. 4. A trading partner or accountability group. Make discipline the default and impulsiveness the exception. Final word. The discipline loop is your edge. Elder didn't just teach people how to trade, he taught them how to think. The discipline loop is more than a trading model. It's a mindset. You reflect, you adjust, you repeat. And over time, you evolve. That's what makes you dangerous in the market. Not because you know everything, but because you've mastered yourself. And that's the true edge. Psychological strength, built on discipline. If you've watched all 5 parts of this series, you've done what most traders never will. Invested in your mind, not just your method. The next step, action. Start journaling. Review your patterns, build your loop. And remember, you're not here to get lucky. You're here to get consistent. Like, subscribe, rewatch when needed, and trade with purpose.